JSE materials supplier Afrimat, JSE listed materials supplier Afrimat has seen an upsurge in their full year headline earnings per share by around 17% to 62.6 cents. The company has also declared a higher total dividend of 19 cents per share, up 11.8%. And joining us now for a look at those numbers, Afrimat CEO Andries van Heerden. Thank you so very much, sir, for joining us. Looking at these numbers and a very optimistic view in terms of what we are seeing right now relative to the past, can we finally get excited about this overall, building construction materials sector?
Well, Eleni, we can only speak for Afrimat, and we are extremely excited, yes.
So tell us about some of the things that actually pushed you higher. I know that your acquisition, the clinker project, is also very much one of the important parts of your company, and that also going to be contributing very positively down the line.
Yes. Yeah, what happened in the past year, our, let's call it the traditional Afrimat business, it was a good cash generative business. On top of that, the Glen Douglas acquisition that we concluded about 14 months ago turned out to be a real star. It turned around very quickly and contributed very, very well. So that was exciting. And after the reporting period on the 1st of March, we officially took over on clinker as well. So that bodes well for this year.
The Glen Douglas Dolomite mine, we're seeing volumes increasing. Yes. On that front. So just tell us about what kind of prospects we have in terms of even more of an increase on production there going forward.
Glen Douglas, the production volumes will probably be stable for the year ahead. What is exciting is that there are opportunity of reducing costs further and thereby increasing margins.
Your concrete products also performed quite well, volumes pretty much steady. Again, housing projects coming through from government starting to increase, and this is also feeding through within the space.
Yes. We're very excited about the government's drive on infrastructure. We can actually see the increase in spending and the improvement in our ready-mix business as well as our concrete products business is evidence of government's increased spending on low-cost housing. And then on roads projects as well, especially in the rural areas, we see a sharp increase.
With regards to margins, it seems that this is still a bit of an issue within the overall space. Are you experiencing the same issue? Are you happy with the level of your margin right now?
Well, you would have seen that our operating margin has improved slightly as compared to the previous year. So we're not unsatisfied with margins. We're not at the levels that we were at the peak of the cycle, but the margins in our company is very healthy.
We're talking off air about the clinker group, and you were saying that, overall it's a very rare commodity that you actually have. Just tell us a bit about the life of mine, if we could call it that, and how then the substitution would take place after that ends.
Yeah. It is a unique product that's being used in the concrete manufactured environment. It is a product with pozzolanic properties, and it is a lightweight product, which is very, very beneficial for concrete manufacturers. Our reserves, we estimate our reserves to be around about 10 years of current production levels. And obviously, after that, the manufacturers would revert back to the normal aggregates, which we supply out of the mines of Glen Douglas.
How much of a competitive edge does this give you?
A significant competitive edge. If we look at the history of that specific company, and that's one of the main reasons why we bought it, there was virtually no cyclicality in their earnings, even during the worst of the cycle of the last couple of years, just showing how strong the demand for that product is.
And then after 10 years, you'll obviously then, could I say, lose that competitive edge. How are you planning to, make up for that loss?
It is all part of a bigger strategy where we're positioning ourselves as an industrial minerals player. The cash that we generate out of this specific operation will be reinvested in some further opportunities, both greenfields and brownfields opportunities that we see, which will take the next couple of years to execute and thereby position Afrimat as a serious industrial minerals player.
Let's touch on ready-mix, benefiting from high demand coming through from government, as we've already attributed to that, but there's various areas of concern, competition quite rife, and not all provinces are actually on the same path of growth as well. So is there room now to move more to the upside? What is your concern with regards to competition and margin as a whole?
Yeah. Our performance in the ready-mix business is really driven by government low-cost housing spending. We see that coming through quite strongly, and we expect that to carry on in the markets that we serve. Traditionally, we've been suffering in the Western Cape with very stiff pricing. We've seen an uptick over the last couple of months, especially the last 2 months of the reported period. We saw a nice improvement, and that's been carried through into this year. So the outlook is very positive.
Again, touching on the margins, tell us about what kind of numbers you're expecting for ready mix, how it stands, what it looks like right now, and what you're expecting in the future.
At the moment, the operating margin is still relatively low in the ready mix market. We would expect a marginal increase in the margins, but then also an increase in volumes being sold.
So 2 acquisitions over the period. Are you planning on any more acquisitions going forward? Are you looking out for any companies?
We have an exceptionally strong balance sheet. At the year end, we were technically debt free with cash in the bank. Since then, we've paid out some of the cash for the clinker acquisition, but the balance sheet is still extremely strong. There are opportunities out there that we are looking at, and as soon as we feel that we have the capacity from a managerial point of view, and as soon as the opportunity that we evaluate is right, we'll
so
do
we
the
can
next
expect
one.
more acquisitions down the line. So tell us in which sector we could anticipate any action.
We're growing the business as an open pit miner in the industrial mineral space, and the opportunities that we are looking at are mostly in that space.
If we don't see, I mean, we're talking about government infrastructure spend, and overall we started to see a far better economy. If things start to slow down significantly, are you geared for any further slowing within the economy?
We've always been a very conservative company. Our balance sheet is the critical thing that needs to be managed very closely. We know that things change overnight, and for that reason we will not overgear the balance sheet. We'll make sure that it is conservative. We make sure that we have a very tight control. If you look at our latest set of results, you'll see that the working capital has been managed very closely, and that will be the strategy going into the future.